Hi everyone! So for today's topic, we're gonna talk about payment systems and electronic magnetic cards. But let us first discuss all about payment systems. A payment system is a mechanism that facilitates the transfer of value between a payer and a beneficiary, by which the payer discharges the payment obligations to the beneficiary. It enables a two-way flow of payments in exchange for goods and services in the economy. The payment system as well is used by individuals, banks, companies, governments, and etc. to make payments to one another. To put simply, payment systems are the medium to transfer funds from one person to another that facilitate businesses and economies. It is comprised of instruments through which payments can be made, rules, regulations, and procedures that guide these payments, institutions which facilitate payment mechanisms and legal systems, and etc., that of which all are established to facilitate the transfer of funds between different participant institutions.
This is Princess Giselle Barbao, and I'm going to discuss about the types of payment system.
There are four types of payment systems, and these are cash, paper-based, card-based, and e-payments or e-wallets. First is cash. Cash is still used for many businesses, such as the retail industry. Coffee shops and convenience stores, for example, still accept cash payments. Considering the fees associated with debit and credit cards, may retail small business prefer cash payments from their customers. Next is paper-based payments. The use of paper-based instruments account for nearly 60% of the volume of total non-cash transaction in the country. Example of paper-based payment is check. Checks have fallen out of favor over the years due to advancements in technology, allowing payments to be electronically submitted. However, there are instances when checks might be helpful, such as when the seller wants a guaranteed payment. A bank cashier's check or a certified check are two types of checks that bank offers to help sellers receive the money owed from the buyer. Third is the card-based payments. Card-based electronic payments can be defined in three ways, depending on the timing of the payment. Pay later payments occur after receiving the goods or services and typically refer to credit payments. A credit card enables a consumer to access a credit line account at a financial institution. Pay now payments occur when the goods or services are received and generally are associated with debit payments. Debit card payments are related to an existing transaction account at a financial institution. Pay before refers to payments for goods or services with prepaid or stored value cards, which are loaded with buying power before the purchase of goods or services occurs. The account associated with the prepaid debit card may be liability of financial institution. Lastly, the e-payments or e-wallet. E-payments, as defined as electronic payment, is a subset of an e-commerce transaction. It includes electronic payment for buying, selling, or services which are offered on the internet. Digital wallets have huge potential to drive more customers to your business. Consumers have become open to alternative methods that would enable them to pay conveniently and safely at home. E-wallet services are seeing massive growth during the COVID-19 pandemic. Two of the leading digital payment platforms in the Philippines are GCash and PayMaya.
This is Jimmy Grace, Tigger Sinas, and I will tackle about the application in the business world of payment system. Payment systems evolve to keep pace with a changing economy. The business world isn't the same as it was 20 years ago. Technological advancements have changed most commercial aspects. The same advancements have given rise to different types of businesses that didn't exist until a few decades ago. It seems like only yesterday when cash was king and all payments were made in cash. However, the changing business scenario, thanks to online shopping, created the need for more convenient, evolved, and cashless transactions. Electronic Funds Transfer, or EFT, originated with the first automated teller machines, or ATMs, in the 1960s. The concept of making financial transactions over an electronic network powered by telecommunications technology became immensely popular because it did not involve moving large amounts of physical cash from one place to another. Banks and financial institutions started using wholesale EFT for transfer of large amounts. Next came the creation of a system for online authentication of the credit and debit cards used in online purchases. To make online payments secure and easier, platforms like PayPal came into existence. They allowed payments for a wide range of services through a link card. PayPal allows merchants and other professionals to receive payments and consumers to make them. Nowadays, online banking is becoming the most preferred mode of payment for the majority of the developed world. Settlement and data hacking risks have created wariness around payment systems involving cards. Also, most transactions involving cards and e-wallets carry transaction fees. This has further contributed to the rising popularity of online payment systems. Money is the engine that powers the economy of the world. With ever-changing business scenarios, it is only natural for monetary transaction systems to evolve. Businesses are breaking new ground, dissolving geographical boundaries and serving the people of a brave new world. Payment systems are keeping pace with this advancement to allow for a safe, robust, and secure way of paying for products and services.
I'm Shihizo Kismerisi Navarro, and I will be discussing about the laws governing payment systems.
Republic Act Number 11127, also known as the National Payment Systems Act. The state recognizes that payment systems are crucial parts of the financial infrastructure of the country, and it is essential that they function safely and efficiently for the stability and effectiveness of the monetary and financial system. The law was published on November 7, 2018, and the NPSA took effect on December 2, 2018.
At this juncture, let us discuss further about electronic magnetic cards.
Electronic magnetic cards, or a magnetic stripe card, is a card that contains a stripe of magnetically encoded data. These cards are paired with readers and writers, and are used in a variety of applications for storing information. It has a thin magnetic stripe across one side of the card, and by swiping the card through or inserting the card into a reader, a computer can read the data on the stripe.
So a credit card contains 3 horizontally stacked tracks, each of which stretches across the full width of the card and occupies a portion of a magnetic stripe. Each track is capable of holding a different amount type of data. These track contains the credit card account number, name, expiration date, service code, and card verification code. Credit cards primarily or exclusively use the first 2 tracks. The third track sometimes contains additional information such as a country code or currency code. Other types of magnetic stripe cards use all 3 tracks.
Let's also try to find out What are the other cards that has magnetic stripes on it?
Now, there are other types of magnetic cards currently in use include driver's license, credit cards, employee IDs, hotel rooms, gift cards, and public transit cards.
It's me, Lalaine Patalingog, and I'm going to talk all about the application of magnetic cards in business world. Magnetic stripe card market accounts for all important factors such as size, share, demand, growth, gross profits, earnings, and revenue to evaluate the rise of the industry in the future. It assesses the data gathered from the past years 2016 and 2017 to give an extensive view of the trends and predicts the prospective growth of the magnetic stripe card industry during the years 2019 to 2016 while considering 2018 as the base year. And also the expansion and growth of the BFSI sector, increase in urban population, improvement in retail development index, and the rapid industrialization are some of the other factors contributing towards the growth of the magnetic stripe card market. Why magnetic cards are better for your business? First, upgrading is easy and cost-effective. Certified terminals starts as low as $200 and depending on your setup, your existing hardware can become a certified with custom integration. Second, reduce chargebacks. If you have better transaction security, you will deal with less fraud and fewer chargebacks. A few years ago, credit card network rules were updated to place more financial risk on merchants without chip cards for the lost or stolen transaction. If you're late to switching, you're at risk of seeing chargebacks continue to increase and will lose cases as much as higher rate. Third, build customer trust. Switching is more than just saving money and reducing chargebacks. It's about protecting your customers. As mentioned, magnetic cards equipped transactions are unique, ensuring that charges are never duplicated or faked. Plus, the less fraud means fewer headaches from disputes and better service for your customers.
This is Mac Anthony Ibanez, and we'll discuss about law governing electronic magnetic cards.
Republic Act Number 10870. This act shall be known as Philippine Credit Card Industry Regulation Law. It is the policy of the state to foster the development of the credit card industry as an indispensable tool in making consumer credit readily available to all Filipinos under conditions of fair and sound credit consumer practices, which are aligned with global best practices in promoting an efficient payment system and encouraging competition and transparency that supports a more effective delivery of credit card and services. To ensure the vibrancy and growth of the credit card industry, the state shall institute appropriate mechanisms to protect and educate credit card holders. This act shall be govern all credit card issuers, acquirers, and all credit card transactions.